Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 7th of August. Starting off with the FTSE 100, which is becalmed either side of the 50-day line. That's currently falling, and we've also had a failure at RSI 50, that little kink there below the 50 level, at the 50 level. So that suggests near-term weakness, unless we get an end-of-day close back above 75.70, which was three-session resistance for this market. Favoured destination would be perhaps a move down to 7,400, but hopefully not worse than that. In terms of any upside above 75.70, looking for 7,700 again, which is that February resistance line, but dying a death bit really in terms of the price action at the moment. On to the DAX, which has had support initially after the bull trap through 16,500 at the floor of that rising August 2022 trend channel. That's around 15,700. Below that risks obviously July support at 15,500. Worst case at the moment is that a retest of the 200-day moving average at 15,200, but hopefully we will avoid that and remain within that channel. End of day close above the 50-day line at 16,000. Would then suggest that the worst is over and we're heading back to try and get to 1-year highs. On to the Dow, and here you can see that we peaked out there through 35,500. There's a risk now of a test of June-July support there at 34,500. Worst case back to the 50-day line, 34,200, but still above RSI 50, so might just about escape if we are lucky and remain above that 35,000. So if we do break higher, then we've got the promise, which seems rather unlikely at the moment, to hit the top of that 1-year trend channel, 37,000 plus, but I think most people would not be looking for that at the moment. On to Bitcoin, which has also been rather disappointing in the recent past. Here we are becalmed really at the around the 29,000 level. That doesn't really fit in with any other level that we've had. The old resistance there back in May, around 28,500, and the 50-day line now rising up to 30,000. So an end-of-day close above the 50-day line is what we're really looking for, and breaking that July resistance line to get us back on track on the upside. But it's interesting that the 50 and 200-day line is still rising quite sharply. RSI below neutral 50, and we had that RSI failure at 50, which was the sell signal, though that follow-through has been so far rather gentle in terms of the downside. Moving on to the stocks, and not as many bright sparks as we had last week, but obviously it's just the start of this week. People are a bit tired after the weekend. On to Artemis is the first one, gapped higher today. We've been very keen on this one, basically since the bear trap gap reversal back in June, unfilled gap to the upside. And even though we had an island top there, the rising 50-day line has been in control here, and the latest gap to the upside suggests that above the floor of the gap, around 0.95, we're looking for 1.4 pence, perhaps as soon as the end of this month. A lot of people willing Blencowe up at the moment, and they may be right now. Finally, we've got the 50 and 200-day lines both rising. Bit of a bear trap there to start August, below July support rather at 4.6 pence, so that's a plus. Along with the rising 50 and 200-day lines, the next time they cross would be a golden cross, and the run up to that tends to be the strongest part of the cycle. We've finally broken definitively that November resistance line there around at the 5.5 pence level, and above that on an end of day close basis, we're looking for as high as 9 pence. By the end of next month. I think the shares have been consolidating long enough now, so hopefully this will be the big breakout. Ideally, you want to see the shares remain above 5 pence in the interim, even if there's a bit of jiggery-pokery either side of that November resistance line. Moving on to a stock which has got a rather strange chart, but one shouldn't discriminate, of course. So here we've got Beacon Energy, and it looks like they've broken out of a falling wedge that's been in place since April. A nice gap through that as well, and gap through the 50-day moving average. View at the moment is above the floor of the gap there, around 0.085. We're looking for as high as 0.14 at the top of that broadening triangle from back in April. That would also meet the falling 200-day moving average, and 0.14 hopefully on track by the end of next month, especially while we remain above that broken April resistance line. Onto a stock which doesn't get much coverage from anyone apart from over here. I think we've got Essensys here. Interesting looking setup here with the bullish divergence on the lower lows that we had for the start of August. We've broken out of that broadening triangle base at around 34 pence, and above that we're looking for 43 pence by the end of this month. But the main thing here, I suppose, is that looks like we've turned around, and the bullish divergence should power the shares up to the low 40s while they're above 34 pence. Another stock which has been rather quiet of late, but looks like it might be reviving, is Genflow Biosciences here, breaking out of that falling wedge which has been in place since April. The wedge line there at 2.1 pence, and above that we're looking for as high as 4.1 pence by the end of next month. If you're cautious of the shares, you wait for an end of day close, maybe through the 50 or 200 day moving averages, the blue and grey lines there through 2.4 pence. But possible turnaround here while we're above 2.1 pence. And you can also see there's an element of bullish divergence there. So the lower lows for August, but the RSI climbing on those dips. Onto a stock which is back with a bang this morning. You can see that Marula is broken after being rather quiet for the last month or so. That it's broken that line of resistance there from back in April, and also broken above the 50-day moving average of 9.3 pence. The view at the moment is the longer we can stay above the old June resistance at 11.5 pence, the greater the chance of a move up towards 20 pence by the end of next month. 50 and 200-day moving averages both rising, so despite the suspension, things look to be back on track with that uptrend that's been in place since the turn of the year. On to Mo Global, which has been rather volatile, but in a nice way, I suppose. We had the vertical move last week, and we've got a V-shaped bull flag with a gap higher today, so that is pretty strong stuff on a technical basis. It implies that above 1.5 pence we could still make it up to 4 pence of that November resistance line projection, and we'll give that till the end of next month for the shares to do that. But obviously we need to stay above 1.4 pence, 1.5 pence rather. That was the recent dip at the end of last week, and also that was resistance on the way down back in January. Another stock which doesn't get much airtime but is here today. We've got OneHeritage. Here we've hit the top of that rising trend channel from back in October. That was around 25.5 pence. And above 25.5, but we can upgrade the upside to as high as a June 2022 resistance line projection at 45 pence. Hopefully we'll see that by the end of next month. On to Prospex, which delivered some decent news today. Very decent, in fact. Here the share still at the bottom of their recent 1 year range, around 6 pence. What we'd like to see, I suppose, is more support at that 1 year trend uptrend line there around 5.9 pence, and hopefully over the next week or so a break of that April resistance line, which seems to have been blocking progress over the near term. Through 8 we could get back up to April resistance at 12 pence, but maybe better to wait for a break of that 8 pence given how long the shares have been taking to consolidate, but not expecting any sustained price action now back below the 5 3/4 support level of the recent past. Good update from Rockford as well, or Rockford I suppose it could be called. Here you can see that we're in a broadening triangle from the beginning of last year, definitively broken that triangle or falling wedge that we had in place since the beginning of last year at 7.5 pence after a lot of consolidation. Above 7.5, looking for 12 pence as suggested before, and hopefully we can get that by the end of next month, and if we're really lucky, by the end of this month. Moving on to Shield and, Skin. Always get those two mixed up. We've got SkinBio here breaking that line of resistance there from back in November. We've got a V-shaped bull flag here on the breakout, which makes it look even better. And the view now is above 16 pence, and that breakout line, we're looking for the top of a broadening triangle in place since last August, which is as high as 30 pence, and hopefully we'll see that well before the end of next month. Maybe get there by the end of this month. bullish divergence there as well on the turnaround, so that should provide extra momentum, as does the way that the 50-day moving average, the blue line there, is already starting to curl up. Onto Saito, which arguably has one of the best looking charts around, just on the basis of that unfilled gap to the upside, support coming in at the top of that gap, and we're just breaking out the recent consolidation. About 48 pence on an end of day close basis. We're looking for as high as 90 pence by the end of next month, hoping for a move, the type of move that we saw back in March, April this year. So let's see if that rather punchy call comes true. Only back below the 50-day line at 40 pence, really delaying the prospect of a move higher, at least to the 70s and 80s over the near term. On to the last three, and good to see that Touchstone is delivering on its bullish promise. So we call it a rising bull flag, which is probably one of the strongest ones, actually. And here we hit our target there at 85 pence, above 85 pence on an end of day close basis, looking for as high as £1 by the end of this month. So let's see if Touchstone can step up to the plate, and very nice bullish flag there over the recent past. Stock or a company which came up with a great RNS today, so anything which involves the word SPUD is normally a nice RNS, and here we've got a bear trap gap reversal, one of our favourite setups, above that neckline resistance at 87 pence, looking for at least up to 102 pence at the top of that broadening triangle from back in March, and in fact only back below the top of that gap there at 82 pence, really questioning the idea of a decent turnaround at Trinity. On to one of the stocks of the month so far, well, the last month anyway. Here we've got Upland, and we were looking for 2.6 pence while the shares remained above 1.5. I think the high today is high as 2.35, so hopefully just a few days away or a week away from that 2.6 pence target, and then we'll have the problem of trying to work out what the next target is. Maybe I will take a look at that over the next few days. But current situation is that while we're above today's support area, ideally 1.5 is the best stop loss there, then looking for 2.6 sometime later this month. That's it from me today. More updates tomorrow.